Hey, look at Target. It's UPB from OptionMillionaires.com. Target has been falling recently, down 3.61% yesterday on earnings. Pointed this out on the watch list at OptionMillionaires.com. The 6750 puts at 70 cents, now over $2. Really nice move there. So that's $700 into $2,000. Had you made that trade, or $350 into 1,000. I think the downside could continue. We're certainly oversold there. Look at the short-term studies. But I think these gaps are ultimately going to get filled. Maybe we'll head back up to $70. We'll see. It's going to be interesting, but no matter what, it was a great trade for downside post earnings. Just like ANF. Let's move to ANF real quick. I talked about this Sunday night. Said I was stock since its ramp up here in November. The Abenomics low had been just channeling, and now finally going to break out of this channel to the downside. It's going to be a very profitable trade. Anyone who was buying the puts that I was talking about on Sunday night is going to be up over 500%. The September 45 puts or the August 45 puts were $1. They're going to be $6 or $7. So that's a nice gain. That's $1 into. If you bought 10 of those contracts, it'd be $1,000. And you're selling for $6. That's $6,000. So do the math there. And the same with Arrow. Look at Arrow this week. Talked about it Sunday night. Arrow broke out of, if you look up my video here at Stock Twits, or you can look it up at OptionMillionaires.com. I was talking about this channel. You can go back a little bit further. There's the 1-year chart. Go to the 5-year chart. See this channel I was talking about? Broke down to the downside. We're going to ultimately hit this $10 and probably $9.50 level. We'll go a little bit below that. Ultimately, down almost 5% yesterday, going to be down again today. We have earnings after the bell. Disgusting. It's going to be nasty. Brought it to you, OptionMillionaires.com. That's me. I did it. Woo! So that's ANF. Autodesk reports earnings after the bell. Folks, 2 summers ago, I talked about Autodesk, this head and shoulders pattern. Look at this head and shoulders pattern. It's actually last year. Sometimes you know, when you start to get older, you don't know when one year ends and the next one starts. But anyway, I was talking about this head and shoulders pattern. See this candle here? That was the decline we saw down here, about $28, and then we recovered. That was the earnings report that we made a lot of money from. I talked about that head and shoulders pattern. We're getting the same thing here. We have the head and shoulders pattern. We broke down through this neckline. I don't know. To me, it looks like this support line is going to get broken. It just feels. Look at the. One of the things I look at when I look at a chart, I say, all right, we're looking at lower highs. Okay, we have a high, lower high, lower high, lower high, lower high. So you just almost draw a trend line across. Each line along the way has acted as resistance, and that is going to send the stock lower. You could also draw this trend line up from the lows here that we saw at about $33, and you say, all right, well, we have support at $35. But to me, and then you look at some of the indicators here, I think we're going to roll over here, and we're going to head down to the low 30s. Call me crazy. That's earnings tonight. We also have Gap stores. A lot of the retailers are reporting earnings, not coming in as rosy as everyone expects. Look at the moving averages here, okay? We had the moving averages just from March all the way through until just recently, going so beautifully. Everything is just so rosy, just like they were from July into October of 2012, and you can look from February into June of 2012. So you can look at the moving averages now. They're starting to roll over. See that? See the red line? Rolling over. Okay, but the price action hasn't really illustrated that. I think that's what's going to happen post-earnings. I think Gap Store is going to roll over post-earnings. I do like the stock longer term, but let's just play for the short term. Okay, we're overbought here. We pulled back. I think we're going to continue, and we're going to get oversold like we were back at the start of 2013. We're going to resume our trend, and Gap Store is going to hit new all-time highs, possibly by the end of the year, but right now is not the time to be buying the stock. That's what it looks like to me. We might get a 2 or 3% move to the downside, maybe more than that. So I wouldn't be buying calls here, basically. I'd be trading it for downside. Let's move to Marvell. Marvell's got earnings after the bell. This stock's been moving up higher since it hit its lows here back at the end of 2012, start of 2013. These momentum stocks surprise people to the upside. So let's not get in the way of this train. Let's see what happens post-earnings. We have Ross stores up. Let's just look. We broke out to the upside here of this long-term trend line. Okay, we're bouncing along. It's now acting as support. It could be a springboard for higher prices. I don't know. I wouldn't rule this stock out for upside. It's another stock I probably won't trade post-earnings or before earnings. We're going to see, because the volatility into earnings is really not worth the risk that you're taking. Pandora. Pandora is up from $7 up to $22.50. The analysts are just drooling all over themselves. Like, oh my goodness, I'm going to upgrade this stock before that guy, or this, It just seems every day, Pandora, somebody comes out and says, oh, I love this stock. Where were they at 750? Just like Hewlett Packard, Best Buy. Where were they at the lows? Okay, Pandora was down here at 750 and was like, oh, this stock is garbage. Music, oh, nobody, everybody's providing. Yeah, and look at it now. It's significantly higher, almost 300% higher. Can't get in the way of this trend, but look, we're significantly overbought. Excuse me. I don't know. The trend is normally your friend. Let's pull back. The IPO here at the $25 range. We got as high as $26 a share. We're not even there yet, so I don't know. This is something I wouldn't trade for earnings, just because you never know what's going to happen. The analysts are behind it. Even if they report something that's not quite as rosy as everyone thinks that's going to happen, it could still continue higher. So let's just go to the general market trend. The S&P 500 is talking about on another video I did, but let's look at the action since November, the Abenomics low. We're seeing a similar move that we've seen with the taper talk back in June. Okay, what I'm looking for is a V bottom. That might start today. Futures are higher. We'll see. I'm actually hoping for a little bit of a pullback. I'd like to see that pullback and then boom, a rocket higher. That's what I'm trading for today. We have bonds. I've been talking about bonds for a long time. Broken down through this long-term support line. Looks very vulnerable here, down to about $90. Talking about this, gosh, about a month ago. I said, hey, the $90 October puts at 7 cents. Well, we'll see what happens. All right, it's UPB here from OptionMillionaires.com. So we had some great trades this week so far. We had A&F. We have Aero after the bell, Aero Pastel, which I think is going to continue to the downside here. It's going to be a nice trade. We have Marvell. We have Gap Stores. We have Autodesk. Going to be a nice end to the week here. So that's UPB, OptionMillionaires.com. Tune in Sunday night. We're going to have a live webinar that I do every Sunday night the week ahead. And also today, 11 o'clock, just before lunchtime, I'm going to do a live webinar, talk about some charts and some option strategies. All right, everyone, have a great trading session. I'll see you in the chat room. Goodbye.